Alrighty, traders. Alrighty. We are live. Fantastic. Let's get straight into today's session. Today, we're going to be talking about what to expect in the next market crash. We'll be looking at the markets, do a bit of a market update for you guys, and also to help you see the bigger picture and what to expect in the next market crash and how to handle it and all that down home country goodness. So that's what we're going to be talking about in today's session there. So I'm really excited. Let's get straight into today. And I'm going to bring up the typical disclaimer first, guys, before I do start. And then we're going to get started. All right, guys. Do not place a trade based on what you're seeing in this session today because trading is risky and it can cause substantial financial loss. There is no guarantees of making a profit in the markets if you don't know what you're doing. So be smart about the way you're trading. And this here is just educational only. So again, be smart about the way that you're trading. Also, guys, make sure you head on down to johnsflashsale.com, Johns with an S, Johns, flashsale.com to grab the brand new Breakthrough Master Trading course. I'm running a special offer here. It's just $7. Grab it. If you need help with the trading, you must get this. So go get it right now. johnsflashsale.com. Let's go straight into, I'm going to look at the markets right now. So what I want to do in today's session, guys, is I really want to open it right up to the bigger picture here. And so let's go to use this here. And I'm going to bring up this chart here. Actually, you know what? I'm going to bring up this chart here for a minute. And I'm going to let me just minimize my 52 moving average here, okay? And I'm going to bring up just to squeeze it right up to the longer picture here. And let me see if let me go to the monthly chart next. So I'm going to bring up the monthly chart here. And what I'm going to do is we're going to say, okay, what can we expect in the next market crash or the next downturn? And where would be some targets that it's likely to get to, and so on and so forth. So as we're looking at this market through here, right, man, this as you can see here, this last bit through here, as you can see, all this section through here, this has been a really big movement to the upside, very big movement, and now we're just going sideways through here. So you can see how we had a nice move up through here, and then a sideways range, and then the market continued up through here. So what I'm looking at here is what I can see firstly is that if I just draw some trend lines from here to here, now we're going way out to the bigger picture here, okay? Because actually a lot of the times the big picture really does give us a bit of the forest from the trees look. And so what we're looking at here is we're looking at, okay, the market actually bounced off here. And the market actually bounced off here as well too. Now, if I actually let me bring up the S&P 500 instead. Let me go to the S&P 500 because there's something interesting that I can see here. So let's go to the S&P 500. And one thing that I did notice on the S&P 500 and why I actually expected the market to bounce where it was this point through here, is there anything here on the chart that could actually tell us, okay, the market is likely to bounce around this time? Now, again, I'm looking at a monthly chart, but was there anything there leading up to this point as this market started to pull back? Was there anything on the charts to say, okay, we're now likely to find a bounce here? I actually was expecting some sort of a bounce around the 2,400 to 2,500, this whole level through here. I was expecting some sort of a bounce. Come on now, some sort of bounce there. Now, what made me think about that, right? And the answer is the big picture. This is where those long-term trend lines really do come into play. And so if I bring up again, we're looking at a monthly chart here, but if I bring up my trend lines, look at this here, and I bring it in, through there, as you can see, right? When I bring it right in, bam, as you can see, look at that. So you got a I just deleted the trend line. Anyway, let me do that. Let me do that again. So as you can see, right, I was expecting some sort of a bounce around this level here. As you can see, let me bring up now what I'm doing right now, guys. I'm just trying to get more and more touches on this trend line through here. So we got a touch through here, and we got all the look at that there, right? Isn't that just incredible? When you draw the trend line, look at this here. We actually we found this bit through there, and then what do we get? We got a bounce off through here, didn't we? Now, and this was back in 2012, and then the market ran up and came back down. And look what happened, bounced right on that exact same line that was going back from here, right? And then look what happened just here. It bounced also here as well too, or it bounced right there. So if I go to my weekly chart now, you'll be able to see the reasons why I was expecting some sort of a bounce here out of the markets there. And it actually didn't quite get down to my trend line there, but I was expecting some sort of a bounce. And then the market did it completely rally back up, and now it's doing what it's doing right now. So the first thing that we will want to start to see this, because for this whole tune to change, what do we need, right? Let's just keep it really, really simple. What do we need? We need what? A close below this major trend line here. And if I actually bring it in a bit more closer, so let me just bring it into what I'm going to do here right now, guys, is I'm bringing it a little bit more closer. So why am I doing that? Because I'm getting the closes, okay? So as you can see, right? See, oh, I just did it again. I just deleted the trend line. Let me let me start again. So I'm going to start from the bottom here, and instead of getting the wicks on the candles, I'm just going to use the bodies. Okay, that's all I'm doing right now. I'm just trying to try and get a lot of the bodies here, and we're going to use that point through there. And drawing trend lines is more of what you're doing is the more bounces off that trend line, the more valid it is. So you can see this body here over a monthly period, right? The body here, what? It could not close below, could it? It actually bounced here. It bounced right here as well too, came down. It actually came down through here, didn't it? Back in 2016. This is when everyone thought the market was going to crash. And so again, we're going to get into what to expect with the market crash, right? So it came down through here. But look at this monthly chart here. Look how the wicks here could not close below, right? Could not close below. If I squeeze right in now, again, this monthly chart, could not close below. We even came down here a bit and ran back up, came down through here. Look what happened. Bounced right at that level and came right back up. So if we're looking at this market through here, right, we're looking at this big movement up, and there could be some sort of a channel through here as well too. And we bring that up through there. Well, that actually, isn't that interesting? Look at that. Look at that. Damn. Resistance, and then came down and found support through here, didn't it? And then it's doing what it's doing right now. So actually, let's bring on that weekly chart. See if there's anything there. It's not really validating it anymore. So looking through here, right? So firstly, what would we want to start to see if we're looking at this big picture here? Okay, what would we want to start to see that this tune? This tune is now starting to change. What would we want to see, right? So I'm going to make that really, really thick. What would we want to see? We want to see what? We want to see the monthly chart on this here close below it, wouldn't we? Because when that happens, that's telling us for the last decade, this level has been significant. If we get a monthly close below here, then that's when we can start to see what? We can start to see some significant movement on the downside. But if it just comes back down and bounces off here for a while, we could be getting ready for another move to the upside. Now, my thoughts, what I think, and which means nothing anyway, what I think is again, we don't know, but we do know we're going to be heading into a winter season, right? A bit of a recession, a bit of a pullback in the markets, which is not a bad thing, guys. Okay, which is not a bad thing. So, what do we expect in the next market crash? Firstly, a stock market crash or a correction takes time. Look back through here, okay? This 2000, it's the peak in 2000. The peak was at 2000 and the bottom was 2003. It took 3 years for that quote unquote crash to happen. Okay. And then we had a boom, and then the middle of 2007 to roughly to the middle of 2009, which is roughly call it close to 2 years of a market crash. So as you can see, right, like these market crashes or recessions, what you want to call it, they take time. And so the best thing we can do as a trader, right, is to stay calm and say, you know what, there is amazing opportunities to benefit from the downside if they come. And the worst thing that I can do is get in right now and pray and hope that there's going to be some sort of a black swan event which is not likely to happen, which is going to send this market massively to the downside. And so as you can see, right, that this market has continued to rise and rise and rise and rise where we are right now on here. Now, that's what we're looking at there on the chart through there. Let's go have a look. Let's squeeze this weekly chart up here for a minute, and let's actually see what we're seeing through here. So I'm just looking at what I'm looking at right now, guys. I'm just looking at the lows. So we've got a high low through here. We had a higher low, higher low. We didn't really have any clear high low through here. We had a very clear higher low through here. So we had a high low through here, came up, had an equal low, then it came down, made an equal top, made a sort of a lower low, and then we came high low, high low. We had this higher low through here. So we have high low, high low. So buyers in control, ran up, made a higher high. Now it came down and made a lower low. Now it actually made a higher high. So overall, who's in control of the market right now on the bigger picture? No one, right? The buyers and sellers are fighting it out. They're fighting it out right now. Now, as you can see, right, when the market starts to clearly make a trend, so as you can see here, right, higher low, higher high, higher low, higher high, higher low, nice move up, no clear to not clear high low, and then through here, right? And then we made a low, a higher low, a higher high, and a higher low. See how the buyers are clearly in control here, and then the market took off. So it'll be really interesting to see what happens through here as this market continues to go more and more and more sideways. But looking at where is this market likely to go to when we start to get a recession? Well, the first point for me would just be go back to simple analysis, right? So the first point would be at least a 50% retracement. People say 60% and 80% and it's going to be the worst recession on the planet, blah, 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 right? We don't know that. We don't know, and that's we can't predict that. And so what we're looking at through here is we're looking at what? We're looking at from this low point through here to high point through here, the absolute low to the high, using the Fibonacci tool. And as you can see, right, we looked at this. This, isn't that interesting? The 50% level is this major support level through here. The 60% level is smack on, absolutely smack on this high here and this high here. You cannot make that up. Isn't that just incredible? Because the market's likely to trace 50 to 60% of this entire move up when it's all said and done. Again, that may take a couple of years to finally unfold. We get a drop for a while and then we have a nice pullback, and then we get a drop for a while and we have a nice pullback. So that's what we can see through there, right? Like we have a very, 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 so this, the first point where we see through here, right, is that it's probably, or the ultimate point that I do see this thing getting back down to is this 60% level. I do see at least a 60% retracement on here. Again, that's probably likely to see a couple of year period, but we are likely to find some support levels on the way down. And that is what? The 32% level, which really interesting. It comes into this resistance point through here, and then probably have a bit of a bounce, and it's going to probably drop back down, go to the 50% level, and probably ultimately head back down to this 50% level. Now, if the market ever gets back down to the 1500 level, you watch, guys, you watch. There'll be a lot of buyers come into there. Now, whether that sustains or not, and depending how fast this drops down, it'll be really, really interesting. So whenever we're looking at the markets, okay, whenever we're trading the markets, we can see, okay, this is what's likely to happen moving forward into the markets. Same for, let's go do the exact same thing on the Nasdaq, and we'll be able to see, let's see if there's anything here. Again, look at the monthly charts here. Let's make a draw of the trend line. So again, we're going to use these long-term trend lines we're drawing here right now. They will come into play. You know what I mean? Like it may not have come into play right now, but look at all that support level. So if I bring that up and I extend that to the right and I make that a lot thicker, we do know, right? We do know that at this point through here, if the market gets down here, the Nasdaq's likely to find a bit of support through here. Now, the interesting thing about the Nasdaq, as you can see, right, it's actually got a massive, massive double top through here. So when we're looking at this massive double top through here on this monthly chart, how we analyze that, if it does break this level through here, okay, so this level through here is the okay, so this level through here is what? That level there is the bottom of this double top, right? We have a top and we have another top. If this is a double top through here, so we have these two tops through here. If this is a double top and it holds and we continue down from here, and we start to break this level, isn't that interesting? Look at that there. If it eventually starts to come back down, look at that there. Two levels of support right there. X marks the spot. So if we break this neckline through, if we break this centerpiece through here of the double top, and we break this long-term trend line, guess what? Game over, right? It's game over for the tech stocks. And once again, where's it likely to go to? Okay, well, overall, we have a 50 to 60% level. So isn't that just interesting, guys? Look at that there. Look at that 50. That's the 50% level right there. Look at all that long-term support level through there. We have all this resistance level through here, support, all this support level through here as well too, back around the 1400, 1450 level there. Absolutely incredible. Now, on the there is a projection we can use for the double top. So how we use that is this, right? So let's zoom in a bit more here. So we see this one top through here, we have this other top through here, and this is the neckline. The neckline is where it actually found the middle of the M, and it found there. So if we do start to break down, what we do is we grab a trend line, right? I'm going to grab a trend line. Let me actually change that color, and I want to change that to say a purple. All right, let's make that a bit thicker as well. And what we do is we're going to measure from the head. We're going to measure from the head. And then we're going to measure down to the neckline. So all we're doing really is measuring from the resistance of the double top down to the support of the double top. And we're going to project this down. And when we project that down, that's where the market is likely to go to on the short term if we start to break this 6,500 level, because that's the projection on the double top. Which, isn't it interesting? Look where that projection also gets down to. The projection is almost at, pretty much right on, the 50% Fibonacci level, which is also major resistance and major support level for the last couple of decades. Isn't that interesting? So this is a bit of a bigger picture here, guys, a bit of a long-term picture here. But what we're seeing right now is, right, we can see how by using simple analysis like this, we can start to really get a good grasp on what's happening right now. And if certain things happen, where's it likely to go to, and what's happening through here? So the 60% Fibonacci level, there is actually nothing through there when it comes to the 60% Fibonacci level, but we can see that through there. So isn't that interesting, guys? So that's what's likely to happen on the next market crash. Is we're likely to see that as the recession starts to unfold, and it may be starting right now. We don't know, right? As you can see in the past, using the monthly chart, right, it generally takes a good few months or more to start, especially when we're looking at things like the S&P 500. Because you can see here, look at this here. This is a monthly chart. Go back to even to the 2000. The top took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. The top actually took around 12 months from 2000 to 2000, and almost from the end of 2000. End of 2009, actually end of 99 towards the end of 2000, you can see that level through there, it took almost 12 months for a whole top to form. And then we started the nice descent or nice pullback in the markets, which is not a bad thing, right? It's like, who cares? A pullback in the markets is not a bad thing. Actually, a pullback in the markets is a good thing. Why is it a good thing? Because it gives smart investors who are not all 100% in, they're going to buy stocks for long-term and hold, collect the dividends, and do really well from that. Also, traders like us, we can actually benefit from the downside. And when the market does drop, it's likely to drop quicker. Look at this over here. The 2007, 2008 top took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Pretty much 10 months before. Look at that there, right? Took pretty much almost a year on the 2008 top. Took almost a year before we came down through to here. So that's what we're seeing right now in the stock market and what's happening right now in the markets overall. And guys, it's really, really, really interesting to see what's happening in the markets right now and what's going on in the markets right now. And there's amazing, amazing, amazing opportunities that happen a lot in the markets. And I'm really, really, really excited. And so that's what I mainly wanted to focus on in today's session, guys. If you haven't got a good trading system, guys, and you would like to learn my #1 trading system, then you can go watch my free training. It's at johnsfreetraining.com, johnsfreetraining.com. When you go there, you'll be able to register for my next training. And when you do register for my next training, I will walk you through my #1 strategy and why it's so powerful and why I believe in it so much. And the one thing that I'll be better using through what I use right now and what I'll be using moving forward. So you can go check out that #1 trading system at johnsfreetraining.com. So guys, what I want to do right now, guys, is I want to answer any questions. So if you guys have any questions in the chat box at all, then just let me know. But that's what I'm seeing through there, guys. A bit of a longer term picture happening right now in the markets. And that's what we're likely to see. That's what we're likely to see happening moving forward in the markets. Very simple analysis, but as you can see, right, look, even though the Nasdaq, actually, you know what? The S&P also has a double top as well too. So this is the neckline. This is the neckline support here. So we have this is the neckline here, and then we have this is the top through here. So we're going to take let me make this purple again. All right, so we're going to make this purple. Let's make that purple. Let's make that a bit thicker. And we're going to go to high. And we're going to drop that down to the support level. So we're going to go to the resistance on the double top to the middle point through here on the double top. And we're going to project that down. And that projection on the downside is likely to get to there. So pretty much just below between that level through there is where the market is likely to get to. On that double top through there. So that's really, really, really interesting, guys, again, to see that through there. So if we do, as you can see, right, if we do start to break, if we do start to break this long-term trend line coming up through here on the S&P 500, then it does look like that we can have we can have a nice movement back down. Then once we break this 2400 to 2500, then we can see a nice movement to the downside through there, and probably end up back down. The first level it's probably likely to run to is probably going to be that 2100 to 2000 level. So somewhere around about there is where the market is likely to run to. So there we go, guys. That's what I wanted to share with you today. It's a lot of people are worried about the next recession. A lot of people are worried about what's likely to happen, and they have this. Some people have these preconceived ideas of what a market crash actually looks like, and to neutralize your journey on this next pullback, I hope today has actually brought you some light and brought you some calmness on. There's no need to rush, no need to be panicky or anything like that, because it does take time for a top to form, and it does take time for an overall the completion of a downward movement to complete as well too. So, all right, guys. Well, that's it for me today. I hope you really enjoyed today's session, and I hope that you please take some of this stuff, as I said before, guys, and start to use that. Also, make sure you head on down to johnsflashsale.com if you want to start if you're struggling with trading right now, and you just want a bit of a breakthrough, then you need the Breakthrough Master Trading Course. johnsflashsale.com. Go get that right now. All right, guys, have an amazing day, and I'll speak to you next time.